Let's Talk Small Business, the real talk, no BS podcast for business owners and entrepreneurs who want to grow and actually enjoy the ride. I'm Mitchell Wilson. Let's get into it. Stuart Pope, welcome to the podcast. Look, you have been a business owner. You've been a mortgage broker for 20 odd years. Mortgage advisor for a very long time. And I've also had the privilege of working with you myself and sort of aligning businesses, which was really exciting. I know that you are, I guess, towards the later end of your career. But what I would love to do is actually just find out what your career's been like. And I know there'll be some awesome lessons we can all learn along the way. And maybe at the end of it, we'll get a little bit of advice or what we can pull from you in terms of business, financing, and all the rest. How's that sound?
Yeah, that sounds great. Yeah, I'm happy to help out.
Brilliant. Well, Stu, let's talk business. So for those that don't know, and I guess I'm probably not so sure about your history as well, take me back to where your business journey started.
Well, that's a long time ago, Mitchell. The business journey started actually last century in 1984. So do the math on that and how long ago that was and how old you are, and you'll work it out.
I was alive.
Yeah. So in my previous life, I was actually an engineer and a specialist engineer in hydraulic engineering. And after quite a while of making money for other people, I decided I should give it a go myself. And started my own business purely by trial and error and encouragement from my bank manager. So all of a sudden here we were with no fixed income anymore from the salary or wages into the big unknown. So
it's scary for everyone, eh?
Oh my goodness, yeah. Especially when you do it by trial and error and not really doing a heck of a lot of background research. What I did know was the industry and how to make money in it, which was good. But actually running a business, had no idea whatsoever. So
at that stage of your life, did you have a family or anything or responsibilities?
Yeah, at that stage, I was in my 30s, is all I'll say. So I had a wife.
Back then.
I had a wife at that time, but I didn't have my son then. He was born later. I had a lot more hair than I've got now, and I could pull out the old photos and show that if I needed to. So that was a challenging time, very, very exciting time, because when I was working for other companies in this industry, I built up a very good client base, and clandestinely they all said to me that they'd support me if I went into business. So I did do that, and they did support me, which is good. And one of the biggest challenges that I had was controlling the growth, because I had to employ staff, I had to buy equipment. I knew nothing about reading financial accounts. I didn't know cash flow was king at that stage. So I was working on an overdraft and in and out of the overdraft all the time. I actually remember once having to pay the wages bill and putting it on my credit card because things were so tight.
Oh my gosh.
So that was a lesson to be learned, that's for sure. But that also taught me another lesson, in as much as cash flow is king, and you shouldn't be the bank for your customers. Absolutely not. When you're in business, you tend to like being your customers' friends, and they tend to take advantage of that at some stage. And their cash flow might be tight, and so I was very friendly with everybody else, and I just let them get away with delayed payment. That was a big, big mistake. Because
I think you hit it on the nail. So many people kind of just have that feeling that to keep the customers or keep them happy, that you need to kind of be easy on them. But I mean, you need to be around as well. Yeah,
that's right. And it's really challenging, particularly when you got materials to buy and staff to pay and all that sort of stuff. And your bank manager's only got a certain amount of flexibility or their history doesn't go that far. So you've got to keep within the records there. So that business
grew. To learn that lesson?
When my first decent customer went bankrupt on me is when it really got hit home. So that was probably 2 to 3 years into business. One of my very good customers started slowing down their payment regime, and then all of a sudden the payment stopped and they went bankrupt the next day. So, and that cost $25,000 back in the 80s. That was a huge amount of money, still is now. So that was very, very difficult to get over, and that's when I had to review everything. So, in 1984, those of you who can remember back that far, we had a change of government as well. Labor came in. They also introduced GST, and that was a huge learning curve for everybody. So,
did they not have GST before then?
No, they didn't have GST.
Oh, learn something new every day. Right.
So, that business grew and grew, and you learn that there's always somebody out there who's going to try and take you for a ride. So you've got to be very careful about that with your terms of trade. You learn hard lessons with that. And if you're not coached on it previously or got a business mentor, you just have to learn these by trial and error. And it's so painful doing that. So particularly when you get big and got a lot of responsibilities in running the business.
So how long were you in that business for, and what was the eventual outcome?
Yeah, so that was a great business. It was a very creative business, and I started that in 84, and I ended up selling the business in 98. Unfortunately, had a marriage breakdown, and this business was in Invercargill, which was a great place to live and be in business. But I had one of those got to get out of here moments, and I managed to. I got a call from a chap up in Nelson who said, I hear you're selling the business. I had marriage breakup, had to pay the wife out, all that sort of stuff. And so I moved to Nelson in 1998, having never set foot in the place. So the business sale and separation settlement basically financially bankrupted me. So I came to Nelson with almost no equity, but I had a very good ability to earn money. So I came back in the engineering business, which was good. And during that phase, I tidied up my own financial position. I cleared my credit cards, got rid of all the debt that I had, and I started going to investment property seminars, as a matter of fact, while I still had my job on the side. And I learned all about rental investment property, which was very, very enlightening. I got an insatiable appetite for all information relating to that. And then after a while, I thought, well, I'm so excited and passionate about this business. I'll do it myself. So I entered the finance industry in about 2002. And you may remember back in those days, nobody knew anything about revolving credit. So
I do. I was in the bank at that stage.
Yes.
Yeah.
So I worked with a company that effectively sold clients revolving credit, which was really easy to do because a revolving credit is a very good facility if you manage it correctly.
If you manage it correctly.
If you manage it correctly. And here's another business lesson. I started my company. It was called Freedom Financial Services Limited. And my lawyer registered the company and my accountant set up all their financial accounts and so forth. And about 2 or 3 years after I started the company, I got a corporate letter from Westpac Bank, actually, saying that we own the name Freedom Financial Services. It wasn't limited, but it was a trademark. Yeah. And so they gave me a cease and desist letter, and I looked at challenging it, and of course Westpac Bank's got much deeper pockets than I have, so I actually was forced to stop that business. And because I liked the industry so much, I looked around for alternatives, and then I came across the Mike Pero mortgages option. At
so
that stage,
business was that mortgage broking? Is that what it was?
It was mortgage brokering with a focus on revolving credit system. Yeah. And in those days,
Home Loans does that now, like a big business in New Zealand, isn't it? Yeah.
It is a very big business in New Zealand, and it's a very good facility that does do. So in those days, you could become an engineer and overnight become a finance advisor. These days, it's much more difficult, which is a good thing, of course. So I did look at New Zealand home loans as an option at the time. I didn't run with that. I ran with the Mike Pero Mortgages franchise, it was then and is now, and decided that was the right thing to do. It was so in 2002 or 3, I think, I signed up the Nelson Tasman franchise for Mike Pero Mortgages. After a few years, you joined the fold under the real estate, so we had a bit of a relationship there.
Yeah.
Well, there was
so
a lot of
directly with Mike at that time, or was it bigger than him?
So when I actually applied, I had to fly down to Christchurch and meet with the man himself, who's a very charismatic sort of a character. And he shook your hand and had a bit of a chat to you. And we went on a bit of a training course for, I think, 2 or 3 days, and then sent back up to Nelson to get on with it. So that was very good. And there's lots of pluses and minuses in buying a franchise. Firstly, it's normally expensive. You have a franchise fee to pay, and often you have ongoing monthly fees. But the beauty of it for me was that nobody knew me in Nelson. Nobody knew who Stuart Pope was in Nelson. So everybody knew who Mike Pero Mortgages was. So that was a very positive thing that I did at the time. They also had some very good advice around setting up and managing your business and how to market and business and market yourself. So it was very heavily market orientated, which was really helpful for me.
You said like back then everyone knew Mike Pero, but if I was to ask 10 people in the street now, name a mortgage broker, I'm pretty certain that 9 out of 10 people would probably mention that and not know many other names.
That's right. And they spent a lot of money to get that front of mind position, and it worked really well. And as a result of that, I started the Mike Pero franchise, and I remember we used to get league ladders from all the franchises throughout the country, and I was always way down the bottom third, and there was these other guys at the top. And I actually did a tour around New Zealand to go and see some of these other guys and what can they do, or what can I do better that they're doing to get them at the top? Because there's only, 12, 24 hours in a day. And so I gleaned a lot of information about that, and it was really inspiring to see me go up the ladder every month or every year. And then all of a sudden I was in the top 3 and the top 5 and the top 2. So I built a very, very good, strong business.
What were the key traits that you took out of that to grow to number one?
It was systems, and it was support from the franchise and from your own people. It was having a great relationship, knowing the products, knowing the different banks' facilities really well, and tailor-making something to suit a particular client. In those days, often clients would come to us when they'd gone to their bank directly and the bank said no. So that was a really good learning exercise for them and for us. And so, I just got so passionate about it. I worked as many hours in the day as the day allowed you to work. And, after a few years, that does take a toll. So around about 2017, 2018, I decided I wanted to step back and take it a bit easier. And that's when I looked at the options for selling the business, which I successfully did in 2017, 2018. And I retired, interestingly enough, and took the opportunity. My wife and I did a couple of trips around the world. And then COVID happened, of course, and we were stuck at home. And I got completely bored. So I was still very young reasonably young, I should say, and very active in mind and body, and really loved what I was doing. So decided to get back into the industry, and here I am, Mitchell.
Yeah, so still, I believe, correct me if I'm wrong, still mortgage brokering for another local company, but also a mentor to other brokers to help come up through the ranks. That's correct?
Yes, that is correct. So, the scenery has changed a lot since I started the Mike Pero franchise. Compliance has come in, qualification has come in. So it's not as easy to get in to be a mortgage advisor, and an experienced one, compared to what it used to be. So, the attrition rate in mortgage advisors is quite high because it's a commission-based industry. And if you don't make money in the first 6 months, the chances are you won't make it out the other end. So that was always challenging. Now, the company that I ended up working with and still am working for were a client of mine with Perro's, which was great. And they were a financial planning company, or are a financial planning company, but they didn't have any mortgage options. So they encouraged me and made me an offer I couldn't refuse. And part of the conditions of that offer was that I was a contractor to them, so I could work the hours that suited me, and that they identified and employed 2 advisors that I could mentor and train. So the objective of that was that those 2 advisors would do the daily mortgage advising business, and I would concentrate on the specialty ones, the investment property people, the people looking to buy into business, or trusts and farms and those sort of things. So that's my role at the moment. I've still got 2 people that I'm mentoring, but I'm mostly dealing with those more involved projects now, which can be really challenging as far as a bank is concerned.
And of course, better give them a plug. Castle Trust is where you're at now.
Castle Trust Financial Planning. Yes, Catherine and Glenn have had a very strong business there in investment planning and retirement planning for many years. And we've just relocated. They were in Motueka, but we've just relocated the whole business to Richmond. And it's just exploded. The new exposure has been really good for the whole company. It's been great.
So you went through selling a business, starting from scratch, coming to a new town. You built up a business, able to sell it, retire, go around the world. Alongside that, I'm pretty sure a couple of things. You mentioned to me a little bit about investment property, and I know in the past we've talked about investing, shares and all the rest. How's that journey gone for you? Up and down?
Yes, it has gone up and down. The investment property was good, and at the peak I had 20 investment properties. So you learn a lot through managing tenants, managing property managers, and managing the banks through that experience. And it's a long-term project. It's not a short-term project, you got to stick at it for, 10, 15 years for all the theory to take place and for you to be in a comfortable position at the end. The share market is a really good investment strategy as well, and there's lots and lots of different strategies in the share market, like foreign exchange or trading in stocks and bonds, those sort of things. It all comes down to education, particularly if you want to do it yourself. And then, of course, we've got managed funds where you can put $50 a month or $100 a month to a fund manager, and they select all the stocks and shares for you. So, all those different aspects are little vehicles you can have to move yourself towards the position of being able to retire. So, retirement's not an age. It's not 65 when you get your KiwiSaver. It's actually a state of mind and a state of financial well-being. So the sooner you can achieve that, the better. But you might have to take on a few risks early in your life and your business life potentially to get to that position earlier than most people would. So
now, just sort of picking up on you sort of use the words managed funds and the rest, and I guess there's a lot of people that actually don't know that they are investing into that when you have KiwiSaver.
That's exactly what KiwiSaver is a managed fund with a few rules implied by the government around it. So managed fund, from my perspective, is going to be the financial saviour of most New Zealanders in retirement. My personal opinion is that it should be compulsory, and we should be investing approximately 10% of our net income. So if you did that from the day you started your job, you'll be independently wealthy well before retirement age of 65. So it's a very, very good vehicle. If you do nothing else, if you like your job where you're getting paid somewhere else, then by all means, put all your money in KiwiSaver. Increase your minimum payments. Don't just do the minimum, but make sure you get good advice on what KiwiSaver provider you're with and what fund you're with within that provider. That's very important for the end result years down the track.
So coming back to, I guess, business side of things, which is, what we hear about.
Yes.
You moved up in terms of the mortgage broking, started at the ground and became, one of the top in the country, I guess, for everyone, because Ontario was clearly the biggest broker out there. Like, any business lessons that you learn from either seeing people and what they're doing in their business, or alternatively, you mentioned a few things. One, you mentioned, hey, they were really good at marketing. Two, obviously, you had to know what you were doing and offer really good customer service. But what else is in there that you've kind of seen and picked up along the way?
Well, there's a couple of things. Firstly, when I've been dealing with business owners, the vast majority of business owners don't know how to read their own financial accounts. So they've got no idea if their business is increasing or decreasing or going sideways. So understanding and knowing how to read your financial accounts is really, really important. And the other thing that I encourage business owners to do is I make the analogy of let's say the Olympic Games. The Olympic Games have got thousands and thousands of athletes in there. Now, can you name one of those athletes that don't have a coach or a mentor? They all have a coach or a mentor. So in business, you should absolutely have a coach or a mentor. And in my own personal experience, that person was the person that I knew and could relate to, who was in the position that I wanted to be in. Like, who was that, 4 or 5 or 6 steps up the ladder compared to where I wanted to be. And I wanted to get to where he is or she is. And so I needed to put in place things that he or she did to get me into that position. So I maintained that quite a lot through my own life. And I encourage business owners that I come across now to do exactly the same. Understand your financials. Understand that cash flow is king. Know where your tight points are as far as your financials are concerned. These days, most business owners don't have relationship with a specific big business manager at the bank. All the banks have sort of decentralized that now, so you've really got to know what your financial position is, what your financial potential is to grow your business. And sometimes having a mentor or a coach will clarify that journey for you.
Now, it's really interesting. On my point of view, you said, hey, it's good to find someone that's above you. But you're right. They need to be above you, but at the same time, not too far above. So, for instance, if I was going to get advice from Jeff Bezos or something like that, his reality is so far out of it. He'll probably be a worse mentor for me than in this particular region than someone sort of a little far above that specializes in that as well. Yeah.
And they don't have to be in the same industry that you're in. They can just be a business owner who's quite successful in a different industry and give you some of those really good business lessons that will help you out. And you'll find that
you're saying I'll have to buy you a beer afterwards because that's exactly what I offer, Stuart.
So most of the time, and almost all the time, there are people in business that are only too happy to help you out for no cost, which is really, really good. But having that formal direction is very powerful.
When I see a lot of people and they don't, a lot of people don't understand their financials or look into it, but it doesn't need to be that complicated. Like, you go to an accountant and they do all the tax and everything, but you do need to have a simple understanding of it. But a lot of people are just too scared and they go, I don't know, is there more money in my bank account or not?
Well, yeah, what I find is people are very, very good at the job that they do in the business that they do, but they're possibly not so good at financial control and directing the business where they want to be in 3 or 5 years' time. So I've always had a bit of a view of where I've been in the last 12 months. That's really important. what the milestones you've achieved or the challenges that you've overcome in the last 1 or 2 years, but where do you want to be in the next 2 years or the next 5 years? And that's really important, to put things in place to actually achieve that and work towards those sorts of things. Sure, there's going to be things that come in there and upset that plan. And I always find that things that come to upset your plan are opportunities. Don't get all pessimistic and down on the lip about it. See them as an opportunity to overcome and build on in the future. Don't make mistakes twice.
One of those challenges I know you had, Stu, and this may still hurt you, but I believe you were all set to go on an overseas trip.
Oh,
and you had
my
an
goodness.
employee working for you, and
Yes.
was it like a week before you're about to leave on a big world holiday, they handed in their notice?
That's correct. So that was in my Mike Pero life. So I had you generally have people within your business that you identify as potentially succession planning or taking over the business ultimately. And this particular person was that person. And of course, when you do a major overseas trip like that, you don't do it on the spur of the moment normally. You have 6 months or a year building up to it. So this particular person was aware of that. And, of course, as you get closer and closer, the excitement builds and you're making steps internally in the business to make sure things go smoothly when you're away. And this person just couldn't hack the pressure effectively. And a week before we were both to jump on the plane, handed their notice in and said, "Oh, but I'll work here until you come back, and then you'll be able to carry on." I thought, no, that's not where I'm going to be. So I actually cancelled that trip, much to the dismay of my wife, and it didn't cost us too much to cancel everything, but I couldn't go away knowing that was the case and it was threatening my business. So we stayed back, we deferred the trip, and got the business up and running, and managed to get away about 12 months later. So that's a classic example of something coming out of right field, and you have to react immediately, see it as opportunity. And it did end up being a great opportunity. It actually led to the sale of the business in the end. These things, that they come at you from all sides, and it's just how you react to them and how you manage them is really important. Thank you for reminding me of that, Mitchell.
Not a great one, but it's a story that I remember and something to watch out for.
Yeah, absolutely.
We can't be held hostage to employees, but at the same time,
right.
You need to.
Well, there's other things that happen too, like laws change, tax laws change. In the investment property world, lots of laws have changed, which have made it less attractive to have investment property from a tax perspective. And so you've got to focus on the other benefits of having investment property. So things change. The good thing about it is that laws don't change overnight generally, major laws. So you have a bit of a lead-up period to work out your strategy, like do a SWOT analysis on that particular problem and see how you're going to come out of it at the end, and make decisions and act on those decisions. It's all very well making decisions, but you got to do something about it and make them happen. So, this is just what happens in business often.
Have you got any stories from your business that were like positive as well?
Sounded pretty negative, didn't they? Yeah, there's lots of positive stories, particularly in the mortgage advising space. What kept me going and still keeps me going is coming across, for example, first home buyers, or even going a step back from that, someone who's overloaded with debt and can't see their way forward, showing them how to manage and get rid of that debt quickly, and then build themselves into a position where they can buy their first home, which is, of course, everybody's dream. So getting those people or couple or singles into that position, and then encouraging them to look further ahead and either get themselves into a managed fund for the future, or work towards getting your first investment property. And now I'm dealing with clients that have got 2, 3, 4 properties. several managed funds. They're now thinking about retiring earlier than 65, which is great. And that's really, really pleasing to be able to do that.
Mm.
So those are the sort of good luck stories that I like, and I've got lots of those. And this what I call financial intelligence doesn't come naturally. You've got to be shown it and taught it. And I got it's a story: you can lead a horse to water, but you can't make them drink. So you can tell people what the solution is, but you've actually got to do something about it to make it happen. And becoming financially independent, it's not rocket science, but you've just got to do things to make it happen.
They got to do the work.
Absolutely got to do the work. Yep. Do the research.
What's your view on business ownership? Like versus someone going out getting a job, employee versus it's a different life, isn't it?
It's a totally different life, and being in business is not always beer and skittles. It's not all it's cracked up to be sometimes. You got a lot more worry, a lot more stress. There's good and bad things. For example, I've always said that when you're in business, you're much more in control of your destiny. You know if your business is struggling or tight. You know if in 6 months you're going to be, have a big challenge in your business. When you're working for somebody else and getting that paycheck fortnightly or monthly, you could be given your last paycheck without any warning whatsoever. That doesn't happen in business so much. In business, you can manage your affairs to have downtime, family time, more so than what you can working for somebody else. But not everybody's cracked up to be in business. They haven't got the capacity for stress that does come with being in business. So some people are perfectly happy working for wages for somebody else, but you can do other things on the side to get you in that financially independent position. You don't have to be in business particularly. So if you're really, really happy working for somebody else, and you're on a good salary and comfort and got a great relationship and a good working environment, then look at other things that are going to help you get ahead financially. So business is great, and I've really enjoyed it, and I've been self-employed for many, many years, but it hasn't been all beer and skittles. That's why I've got a haircut like this, Mitchell.
Same. So I was the same. Like I went to the bank, you mentioned, like when I was out of school, and quickly went up through the ranks. And to be fair, I was a young guy, maybe 21, doing the same job as the 50-year-olds out there.
Yes.
But I saw some people that were slightly older than that, and they had a wealth of knowledge. And for someone would just come along in the bank, a new manager, and just fire them, hire someone cheaper. It's just what happened. And I sat there and I thought, hey, I may be the golden child right now, but I'm going to be old like that one day. And to me, I felt less secure working for someone else. And I really, like you said, wanted to create my own destiny. So I actually feel more secure working for myself than anyone else because I'm in control.
Well, what it does is it builds confidence in yourself. You're not looking for someone else to give you answers. You've got to come up with the answers yourself. And you can control things in your future. There's some things you can't control, like I said, about changing of tax laws and stuff, but you definitely can control your future. So when I had to sell my engineering business, I went back to working for wages for a while until I rebuilt that confidence in myself and passion, and then went back into being self-employed again. So you can switch between the two, but some people are just not built up to be self-employed. So it's horses for courses, really, and I respect and appreciate both sides of that position.
I mean, I love business. I love talking about it. This is, I do it for free, to be fair, but
absolutely,
that's my passion. When it comes down to it, talking about business finance, now I know you're more residential finance home broker, but when someone's come in and they're looking for a loan to start a business, to expand a business, what do you see the outlook and maybe some sort of overhanging advice to those people? Because I know as soon as you mention business to the bank, your interest rates go right up.
Go right up, yep. So there's a couple of things that I've learned over the last few years, particularly about business banking, is banks these days, because lots of regulations, are very much tick the box bank. They work within guidelines, and if your requirements are outside those guidelines, they're not interested. A classic example of that is property developers. Banks used to love property developers. Now you can't get a decent deal at a bank for a property developer. So in business, you've really got to know what your capacity is for borrowing extra money. The banks are there to lend money, so you've got to present a really good story for them to make them comfortable that firstly, you've got the ability to borrow it and you've got the ability to repay it. Talking business and business finance, a lot of business people have got misguided loyalty in their bank and their quasi-bank manager. At the end of the day, the bank manager will do as much as they can, but there are very much limitations. These days, internally, the bank managers are continually audited. They can't make the decisions that they used to make. And to have success in a proposal with the bank, it all comes down to how that proposal is presented to the bank. So as a financial advisor, sometimes I have to filter out what the client tells me compared to what I tell the bank. And you can't not disclose things because that's effectively illegal. But there are certain things that the bank don't need to know. And if you just go straight into the bank and pour your heart out to the bank person and tell them absolutely everything, there might be a little gem in there that'll actually go against you instead of go for you. Whereas you're thinking, I'm telling the bank manager everything that I know and I need to know, but there may be something in there that they don't particularly need to know. So that's why working with an experienced business bank financier will pay dividends, that's for sure.
It's kind of changed. As you said, like it used to be people would go to the brokers when they couldn't get it from the bank. But now it seems like because you haven't got a relationship with the bank anymore, people turn over so much. It's decentralized. It seems to me to be better to go to someone first so you can, one, get actual decent advice. Two, they're probably going to be around when you need them. And three, you're more than likely to get a loan, not the other way around.
Well, when I first started in the Pero business back in the early 2000s, it was about 9% of new business went through mortgage advisors. Now it's actually about 55 to 60% of new bank business goes through mortgage advisors. So these days, with all the law changes and rule changes, the banks are very tied on what advice they can give you. They can't really give you any advice because of the liability that they're potentially exposing themselves to. Whereas that's where an experienced financial advisor, business advisor like myself, we've got the liability insurance if we do say something incorrect. But again, we can filter things out. We can present it to the banks and the lenders for the best chance of success. And if your existing bank says no that I've presented the deal to, that's fine. I won't present a deal to a bank unless I'm confident I'll get it approved. And there's lots of other banks out there, even though you've never had and your business has never had a relationship with another bank. I have that relationship and I can potentially get your business approved there. So why show loyalty to the bank to you that said no, instead of changing banks to another bank that doesn't know you? Sometimes it's easier to get approved at a bank that doesn't know you than what it is to get an approval at a bank that does know you. So it's a bit counterintuitive, really.
Okay. Traveling back, if you could, what would you, talking about business only, not life choices, but business, what would you tell the Stuart with hair about business?
Again, in retrospect, in some ways it's better buying an existing business, one that's had some trading history. Your risk is lower because, that particular business has got some history. It has got some sales from day one. Starting a business from scratch, is riskier. Buying an existing business, you possibly pay more for it, which is understandable. Starting a business from scratch, you pay less, but you've got a higher learning curve and a longer time before it becomes sustainable. So
you need to ramp it up, don't you?
Yeah, absolutely. So doing research, getting good quality advice from a mentor or a business coach before you buy the business is a really powerful thing to do. And don't try and do things by trial and error. You need to get good quality advice, particularly when you're new in business.
No, I love that. I love that.
That's the gem that I'd impart on you, Mitchell.
And what do you see for the future now? Like, do you think you ever want to retire, or this is retirement, just sort of still keeping your feet in the water?
This is largely retirement for me, being able to manage the hours that I work. And whilst I'm still mentally capable and physically active, I'm happy still working. I would be absolutely going nuts if I was sitting at home reading books and looking for things to do all the time. So, and you'll find most long-term people who have been in business have got a little bit of that attached to them. That they'll work as long as they can, as long as they're happy and passionate about what they're doing. And that seems to be the place that I'm going to be going forward.
Happy and So
much
of a need is that in business, in your point of view?
Oh, it's a big need. Happy and passionate is a big need. Passionate about what you're doing. If you don't like what you're doing, my philosophy has been change jobs, change the business. If you don't like what you're doing, if you're not enjoying it and wanting to develop it, then change it. You've got to go to work every day, looking forward to go to work and looking forward to getting into some of these challenges. So if you don't want to do that, if you think, oh goodness, I don't want to go to work today, and that's a continuing trend, change what you do, because then it won't be a job. It'll be a passion. It'll be an enjoyment. It'll be a legacy that you can leave for other people. So that's what I'd recommend.
You're no exception to the rule. I kind of find entrepreneurs, they don't just have one business. I mean,
no.
They finish one and it's like, what's next?
Well, yeah, that's a good point, Mitchell, because believe it or not, I used to have a hairdressing salon. Get a load of that. I also owned and part-owned a beauty therapy business. Where's that in all things, So you do tend to investigate different areas and things that you can improve and potentially sell on. So when you buy a business, you should always have a view on getting out of that business or leaving it as a legacy for your kids, for example. But you buy a business, build it up with the view of selling it and potentially retiring. So, I've gone into all sorts of different businesses just to gain experience, seeing an opportunity to build them up and sell them. Or just do things on the side like the stock market trading or the property investing.
So we just talked about it before about, having a passion for it. How, for instance, does the hairdressing business, I'm going to just presume it's not a passion there. I may be wrong, but I've got no hair like you.
It was recognizing an opportunity. So it was coming across a distressed business that I knew that if I could buy that business for the right price, install systems and processes that would make that business improve and be attractive to a potential purchaser. So that was the reason for going down those really different paradigms on where my core understanding is. It was recognizing an opportunity on a failing business or a distressed business to import my skills and experience into it and then sell it on and move on from there.
So that was just the passion of growth and what you could bring to the business.
Yes, and during that process, I was educating the people in the business on how to run business and how to manage it, and so I was imparting that experience as well.
And that comes back to what you said before. So many people are good at what they do, be it a
Yeah,
hairdresser, a painter, or plumber, whatever it may be, but
absolutely.
no one's really taught them how to run a business.
Yeah. And managing staff, that's another big ticket item that you've got to really get your handle on. Managing one or two people is way different to managing 50 or 20 people. So, and that's where a business can fall down really badly and get a bad toxic culture internally in the business if the staff aren't listened to or felt like they're listened to. So that's a big part of growth in your business as well.
This may be a dangerous question to ask, but you see a lot of books, see a lot of accounts of people to get loans, etc. Are there
Yes.
any businesses that, not because of passion that you just don't enjoy it, but are there any businesses that you'd probably want to stay away from more so than others?
Not really. A lot of the business, you're there to make money in a business. You're not there for a job. You're not buying yourself a job generally. You want to make money out of the business, and you want to make better than the odds if you're going to be operating that business on a daily basis. So there's not one business group or industry that I wouldn't do. It comes down to what I do see is financials for businesses, and then look at the business owners and see how those business owners relate to the business financials. Sometimes you'll see very flashy owners, but their business financials are very scratchy. That comes out a lot when I'm reviewing things and reviewing financial structures. So, keep your head out of the clouds, keep reality, that'll put you in good stead. So, many times I've come across people that I can't get lending for because they've got way too much debt and they won't listen to me on how to get themselves out of that debt. It's a pride thing, maybe an ego thing as well. And you just have to learn to walk away from those people, in the case of people refinancing their home loan, unless you've got mum and dad on board on the same page wanting to move forward, as an advisor, you just got to back off and get on to the next person, because it's an uphill challenge if it's up to you to get those people on the same page. So, yeah, there's pluses and minuses in that, but it's really seeing the financials and relating them to the business. There's all sorts of research you can do to how much a business should make in the net profit in a particular industry. So looking at those metrics is important. So when I come across, let's say the hairdressing salon that I mentioned before, you can look up the metrics on what sort of net profit an average hairdressing salon should be making. And is this business making that? If it is, good. If it's making more, better. But if it's not making that much, where is the problem? And there's always a problem with people, with a business, when people are wanting to sell it. So what you've got to do as a potential buyer is identify what that problem is. Is it the business owner? Is it something in the processes or the systems? And then finding a solution to overcome that problem. So there's lots of research and information you can find out about a particular business in the industry category that it's in, before you actually, as part of your due diligence, before you go and buy something.
That's amazing advice.
Mm.
Hey, we mentioned before, you're doing what you love. You're doing it because you want to. You've been around the world, had successful businesses, been on that ride. So my last question for you, Stu, is how do you define success now, and has that changed over time?
Yes, it has changed over time. Success comes down to how you feel internally. Are you happy? Are you positive? Have you got a positive outlook, or have you got a pessimistic outlook? That's really, really important. And I've been positive in the face of terrible pressures. And that's what's kept me going through. Having a happy family life is really, really important. And you have to change your working situation to make sure you have a happy family life. I've got a close family member who is a top chef, and he was working in a very top restaurant, but socially it was terrible hours, and it was affecting his relationship at home. So he decided wisely to take a lesser chefing job and have a much happier home life. So that's really, really important. But you've also got to have a vision on when you're going to retire. So when I was involved in teaching business and teaching financial intelligence, if you like, I come across so many people that they're in their 50s and 60s who were going to be solely and ultimately reliable on the New Zealand superannuation when they gave up work. Because of their previous circumstances, and that is a terrible position to have to be facing. So the sooner you can do something, the sooner you can put things in place, the better it's going to be long term. It's a long term game. It's not a short term game. There's so many people chase a short term fix, and you see stories about those on the internet and the news all the time. Becoming comfortable is the right word, is a long-term game. It's not a short-term game. So hopefully that answers your question, does it? But
no,
family life.
There's some words of wisdom coming out of your mouth, which is amazing to hear your story, amazing to hear all those bits of advice that you've learned along the way. So I hope other people take this on board, and rather than learning through, what do you say, trial and error, learn for yourself, study a subject,
absolutely.
Get into it,
Cool.
Get the help, the support that you need. So
yes, absolutely.
It has been a pleasure. I appreciate your time, and enjoy retirement. This is it.
It's been interesting, Mitchell, but it's been a pleasure going forward. And I'm only too happy to help. Being in business has been fantastic for me. And in your business, offering those coaching services is definitely something that new business owners and existing business owners should seriously consider to get them in the place where they want to be in a few years' time. Thanks, Mitchell. Great.
Let's talk small business. I appreciate you tuning in. If you got value, hit subscribe, like, or drop a comment. It spreads the word and might just help another legend get their breakthrough.